to bring you a super special realtor webinar series. As you know, each month here at Pineapple, we like to bring some wonderful content to all of our valued realtor partners and ensure that they're armed with the most up-to-date information to help their clients make the best decisions they need in the current real estate landscape. This is an ever-changing environment that we're in right now, and that our commitment to all of you is to ensure that we're doing our part in supporting your business growth and ensuring your clients have the valued solutions that they need. To kick things off, I'd love to introduce myself. My name is Shubha Dasgupta, and I'm the CEO here at Pineapple. And it's my honor to be here today to actually host the webinar with Clive Coke, my good friend from HomeEquity Bank. And we're going to be talking a little bit about reverse mortgages and how reverse mortgages play an integral role in today's real estate landscape. You might be thinking, well, reverse mortgages, that should only help the older generation that already own homes and have properties. Well, that's not true. Reverse mortgages are going to help every generation. They could help the younger generation from down payment supplement to receiving some early inheritance that might help in their home buying journey. It'll help them navigate the needs of their parents or their aging population and aging family members that might need some support and some guidance. But we're going to be touching on that in more detail as we go out throughout today's webinar. Just want to quickly capture a little housekeeping as we get through today. So the first thing I want to capture is our Pineapple Indochino event. As you can see up on the screen here, we have an incredible event happening on May the 18th from 4 p.m. to 8 p.m., where we're going to be hosting our partners and our agents to get suited for custom suits at Indochino. And that's going to be at the Indochino location at Yorkdale Mall. If you want to join us for this event, we have some incredible promos and discounts that are going to be happening right on site. We'll have some great food, some beverages and entertainment, and you can get custom fitted for a suit. Go ahead and scan that QR code and get registered for the event. And by the way, Indochino is now suiting both men and women's. So you can get men's and women's custom fitted suits. And finally, before we kick things off, don't forget to follow us on social media. So go ahead and take a minute to scan that QR code, leave us a Google review if you love what we're doing, and follow us on our Instagram, Facebook, and LinkedIn. Without further ado, ladies and gentlemen, let me take the pleasure of once again introducing our guest for today, HomeEquity Bank, and more specifically, Regional Vice President of HomeEquity Bank, Clive Coke. Thank you so much for joining us, Clive. It's a pleasure to have you here.
Thank you for having me, Shubha.
Well, today's presentation is actually not a presentation. So I'm going to go ahead and stop sharing screen because today we're going to have a conversation, which is something that's a little bit more impactful and a little bit more engaging for our audience.
Absolutely.
So let's jump into conversation.
Awesome.
So Clive, I know that reverse mortgages are something that often have not a reputation, but a misrepresentation of what they really are. Do you want to just start things off in helping our audience kind of understand what reverse mortgages really are?
Yeah, I think that sometimes what happens is people tend to overcomplicate the simple piece of a reverse mortgage. And really, at the end of the day, a reverse mortgage is a loan, just like any other mortgage loan secured by someone's home. And it allows someone to tap into and access the equity in their home to fulfill and to satisfy whether it's a need or a want themselves. You know, I'm happy that we're going to be able to go through all of the different ways that a reverse mortgage can be used and that solution can be used. But what I'm really excited about today is for the realtors that are joining with us today, so that they can walk away from today's session understanding how a reverse mortgage can complement the business that they're in right now.
Absolutely. And why don't we jump right into that? And the first question that I had, given that our audience today is built up mostly of real estate agents and, real estate industry professionals, obviously a big thing for them is the fact that today in Canada, we have a large aging population. And this large aging population are homeowners. And most of their wealth is actually tied up or locked up in that equity of their homes. So how is a reverse mortgage helping this aging population access some of this equity, and what is it actually helping them do?
Yeah, no, it's a really good question. And one of the commitments that I have with today's session is to make certain that everything that I say is for the benefit of a realtor. So I'm thankful that the mortgage agents and brokers at Pineapple are putting this session together. When I was thinking about today's session, I was saying to myself that a realtor might say to themselves, why would I ever want to attend a session like this, where we know that what's being promoted is keeping people, giving them the ability to age in place or to stay in their homes. And so let me first touch on one of the R's that I'll speak about today, and renovation is the first opportunity that I believe is in the marketplace today. One thing that we know, and what our data tells us, Shubha, is that individuals who are looking to sell their homes, sometimes if they simply put in some pieces of renovations into that home, in their kitchens and baths, it can substantially increase the sale price of that property. And so one thing that I want to help people understand is that you can use a reverse mortgage to tap into the equity of the home, to do the renovations in the home, and then turn around and sell the price of that property at a lot higher price than would have been sold prior to those renovations being done. So the first thing that I would touch on is renovations.
And I think that's something that's very important in today's environment, especially in today's market, where we're seeing, sellers and buyers at different rely on this wealth to be able to navigate them through the next phase of their life into retirement, whether that means taking care of some of their medical costs of nursing or other PSWs that they may require, or whether it means getting into an old age home. So being able to maximize value, I think, is something important for sellers. So if I'm understanding you correctly, Clive, what you're saying is that in today's market, where an elderly, couple or one may be living in a property that might not have been renovated or might not have been touched in recent years, could get a refresher by tapping into some of that equity, maybe fully renovating it, maybe just doing some light renovations, maybe adding a basement suite or something of that nature. And by doing that, they can actually increase the value of their property more than what was invested into it and benefit a little bit better to be able to drive some more income into retirement.
Exactly. That's exactly it. And the reason why for the realtors that are on this session, that I'd like to make certain that you connect with a Pineapple mortgage agent or broker, and we should be very happy that they've invited you to this session, is because they would know the type of reverse mortgage product that would best suit that customer. And Shubha, people get surprised when I tell them that there's actually 4 different reverse mortgages that we actually carry at HomeEquity Bank. And so if the purpose of the funds is for a short-term scenario where the borrower wants to probably pay off that reverse mortgage in a short order, we have a product that's geared just towards that. So this is why it's important to speak with a Pineapple broker to assess your customer's needs and to understand how long they'll hold this product for, to control in their prepayment costs.
And I know, Clive, that many of our clients and the aging population, they have limited income, right? They have more, not as much flexibility in terms of, making large financial decisions like this. So when you're speaking to someone, let's say a renovation or property could range from $40,000 to hundreds of thousands of dollars. I know one concern that, a client in this scenario would have is, Clive, how am I going to afford the payments? It's going to be a 4, 5, 6 month renovation. How am I going to carry this mortgage or these additional costs for that period of time on my, limited pension or whatever type of income I have?
Yeah, no, it's We did a study on our consumer base a few years back, and Shubha was actually split right down the middle in terms of customers that we have that actually needed the product. So when customers need the product, they're looking to say to us, I need to alleviate the stress of debt. I need to be able to take care of unplanned expenses. So about 50% of our base of customers fit directly in that bucket. The other 50%, Shubha, are what we call our want customers. And on the want customer side, those are individuals that say, I would like to travel. I would like to golf. I would like to eat steak. I'm sorry if you're vegetarian, but that's some of the comments that they might make. And so we want to make certain that even though we do service customers that fall in the need side, we also have customers that are very savvy and they use a reverse mortgage to actually increase their wealth.
Amazing, amazing. And I mean, you've obviously given us one way that they're increasing wealth by adding value to their property, and that could position themselves for, a future sale at a higher number, or even just being able to stay in their home a little bit longer, enjoy some of those renovations as they kind of navigate through what the next phase could look like. So what would be the second R that you want to?
Yeah, so the other R that I have is reinvest. And the reinvest R is where someone is tapping into the equity of their current home, but they're using that equity to reinvest into the market. And there's a couple different ways that they can reinvest at the market, Shubha. Let's go through the first option first at the bank of mom and dad. This is a scenario that we're seeing quite a bit in today's market, where you'll have some children or grandchildren. They've done their part. They've saved up well. They've got a great down payment, but it's still not enough. And so they start to look to their parents or to their grandparents now to participate and to contribute into them having home ownership sooner rather than later. And so this concept that we call reinvesting into the real estate market through gifting a down payment to a child or a grandchild. Another form of reinvesting is where someone decides to make the decision that they would like to either buy a vacation property or they would like to purchase an investment property. These are two different other ways that people can reinvest into that market. And so these are this R for reinvestment is a great way for us to think about how people use their equity to help build wealth, either through their children, grandchildren, or simply just for themselves.
And I want to dive a little bit deeper into each of those, actually, because I think there's a couple of different ways that we can take those conversations. So if we started first on helping children or grandchildren kind of get into their homes, statistically, 35% of first-time home buyers received a down payment supplement or down payment help from family, specifically their parents. And on average, that amount was sitting around $70,000 last year. So a significant amount of money. Now, I know that many parents say to themselves, well, I'm giving this money to my children, right? And it is a gift, right? But you're using the word reinvest. And it's something that I've often talked to parents about myself personally, whether be it of friends of mine or just close relationships, in the sense that you're not actually giving money away and your children are going and spending that money on a non-tangible asset. You're actually giving them money so that they can acquire wealth. And that money is now secured in this asset called real estate, right? They can see it, they can touch it, they can feel it. Their children are going to live in it. They're going to raise their children in it. And I think that part of the equation was often missed with parents, in the sense that it's not always just a gift, as we're calling it, but it is just a reallocation. I have money in this house, and maybe now I can help put some money in that house and help the next generation starting to build wealth.
Yeah, it's a really good point. When we look at the individuals that actually receive this gift, there are other options that are available in the marketplace. And that's why I believe that using the services of a mortgage broker to help guide which is the best option. A reverse mortgage is one of several options that a mortgage broker would have access to. The benefit, though, of using a reverse mortgage has certain unique pieces. One piece is that you're not cashing in your current investments, triggering income taxes in that scenario. The other benefit is that you're not formally taking a credit product that payments are required. So you're not taking away from your own cash flow. And number three, it's the funds are tax-free. So when you combine those options together, we're not here to say that every single time that it must be a reverse mortgage solution, but I think that when you look at other options that are available, you need to peel back and pare away which ones speak best to your customer, who's gifting these funds, and then hone in on that structure.
And what really works for them. I think one of the other things on that topic for our audience to consider is real estate across Canada has seen tremendous growth over the last 15 years, probably more growth than anybody would have anticipated. Mm-hmm. And when you consider it from that perspective, there was a certain amount of value I think Canadians assume their homes would have as they approach this age or as they approach retirement. That value is probably far beyond what their wildest dreams ever could have been. I think that's something that needs to be talked about as well with that generation, to understand if you have $300,000, $400,000, maybe $500,000, $600,000 more in equity than you thought you may have had. What about accessing some of that to enjoy your life or possibly help give an opportunity for the next generation to start theirs? Because it wasn't money that they were planning for necessarily in a lot of cases. In some cases it was, and in some cases it's needed. But in a lot of cases, it's above and beyond what their plans required of them. So they could have access to that in a way to be able to support the next generation.
Yeah, I agree with that, everything that you're saying in terms of home ownership. We often laugh when we sit down with some of our customers and clients, and we're asking them the question, what do you think that your home is worth? And they'll say, no, I think that my home's worth maybe 600,000. And, we do an appraisal and the home's worth 1.6 million. And so I think that some people just have lost connection as to how much homes have appreciated over the last while. Personally, I could say for myself, when I went to purchase my first home, I remember what interest rates were. My interest rate at that time was 9.9%, so just under 10. And I thought that that was an amazing rate that I was getting at that time. But then conversely, you look at the value of the properties. At that time, the property that I purchased was 145,000. So things have really changed in today's economic market in terms of the converse relationship between interest rates and mortgages.
Absolutely. And I think for our audience, one thing that I'm taking away from this part of the conversation is that although we believe reverse mortgages are a conversation for, the 55 plus age group, it's could also very well be a conversation for that, 25 to 35-year-old home buyer that's just beginning their journey, that may have parents that fit this category, to say, hey, let's make them a part of the home buying process. Let's get them involved in the conversation to see how they might play a role in this transaction. So for those of you, that are watching this with younger home buyers in your pipeline or younger home buyers that you're looking to support on their first homes, let's not forget about the potential they have to get access to down payment support and supplement through engaging their parents into this conversation.
Yeah, and this is a reason why I really truly admire realtors that have gone out and invested the time in the SRES designation, the Senior Real Estate Specialist designation. These realtors are the ones that have actually spent a bit of time. So I'd like to talk a little bit about the SRES. I don't know if you have any comments on that.
No, please share a little bit. I know what it is. I love it, but please, would love to hear it.
Yeah, so, I think that there's a real opportunity for us to partner with realtors who have the SRES designation on an even deeper level. these would be individuals that have taken the time, invested their money to learn more about the demographic that we currently serve. This is an underserved demographic. It's an underserved demographic for a lot of reasons. I think that a lot of individuals tend to keep away from this demographic as opposed to running towards this demographic. My father's in this demographic, and they are a fun demographic to work with. And I can share a story with you. Back in the early 90s, I was one of the first people on my street to purchase a cordless phone. Not a cell phone, a cordless phone. And so my dad would watch me walk across the street, use this cordless phone. And so he decided to take this cordless phone with him in his car. And he drove for about an hour to his destination. And then after he got to his destination, he came back home and he said to me, Shubha, Clive, this is junk because it doesn't work. So he doesn't understand at that time, back in the 90s, the difference between a cordless phone and a mobile phone. So it's fun to see the transition from him, from where he was and even where he is today. Now he'll send me a text to WhatsApp and to a regular text message, fully embracing technology. So the individuals who are in the SRES designation, what I enjoy about this group the most is that they would have already understood what is needed to service this demographic. So they would have taken the time to understand the emotional attachment that people have to their homes, to understand the fact that 1 out of 10 people in this demographic want to move. Only 1 out of 10. And to understand that there are individuals that simply have a lot of emotional trauma when it comes to moving from their home. I look at myself right now, and if you were to blindfold me, I could find every nook and cranny of my home because I've lived there long enough. And this is how attached people get to their properties. And so I really admire the people that do have an SRES designation because they've taken the time to recognize not just where the market is, but where the market will be. And we know with the statistics show about 1,000 people turn in 65 a day. It's quite significant.
Well, today there's more Canadians that are 65 or older than there are 5 or younger, which means that there's a very significant opportunity here for the real estate community at large to be able to support this demographic. And I think one thing that's very important from that concept for us to really absorb is without that older generation being in a position to sell or downsize or take the next step into a retirement home or long-term care facility, there will never be enough inventory for the younger generation to be able to buy and get into the home buying process because it's all a cycle, it's product that's being used, right? So I think there's a conversation to be had for those that are focused on that demographic, to have that conversation about what is the next step for them so that we can also open up some inventory in markets that we know are lacking supply that we need.
Yeah, I agree. The whole concept of having the conversation is a crucial piece. And when we are in this space of serving our customers, it's not about us being order takers. It's really about us truly giving advice based on our knowledge and experience and what we've seen to really help these people make the biggest financial decisions of their life.
And I know, Clive, I've gone through it recently. I don't know if I was telling you, but my parents have recently downsized.
Okay.
And a reverse, and recently meaning like within the last couple of weeks. And part of that conversation was a reverse mortgage in terms of bridge financing. That was a potential option because in today's market, you probably want to buy first, or I know that's changing quickly, but you know, a few weeks ago, we were potentially in a market where you may want to buy first and sell after. You may want to sell first, buy after. Regardless, you may not line up closing dates. So what does the bridge look like on that, right? How are we going to be able to finance that? So a reverse mortgage was part of that conversation. Reverse mortgage was a part of a couple other conversations, but on the main topic that I want to touch on is what happened here was my parents actually relinquished control over the transaction. What they said was, this is overwhelming. As you said, daunting. We aren't ready for this. Can you handle the transaction for us? And again, what that leads me back to is I know when we think reverse mortgages, we think of the 55 plus demographic, and that's who we need to be talking to. In this specific demographic, now, obviously, I am a mortgage professional myself, but if I was looking for a reverse mortgage as bridge financing solution, the mortgage professional would have had to talk to me. The real estate professional had to talk to me. I was the one navigating this situation for my parents, and I was the one taking them through this journey. So as much as, you know, we may feel that it could just be a conversation solely for the people that are older, it starts from the children as well, because children are going to be a big part of that conversation, the same way parents are a part of their children's decisions, right? So I think for the audience here, having those conversations with different generations are going to be an important part of building that trust.
So question for you, did they end up staying in their same neighborhood where they previously were?
They did not. So my parents ended up, you know, what was important to them was being close to their grandkids and being close to us as they begin to age and realize that they may need some additional support. They may need us to be able to help with certain things that, you know, they may no longer be able to do, dropping off groceries, things of that nature. So they wanted to make it easier for us as their adult children to do so. So they actually moved closer to us to be able to do
love
this.
That story. That's a powerful story, because some of what we actually come across is individuals, we call it right sizing. That's a third R. So we call it right sizing, where people want to move from where they are. But the challenge that they have, Shubha, is can they still stay in the neighborhood where they grew up, where they spent the last 20, 30, 40 years, where their doctors are, where their all of their healthcare, all of the support that they have in that neighborhood, can they stay there? And so for the realtors on this call, what I want to help you all understand is that a reverse mortgage can be used on a purchase transaction. And so why would someone ever think about using a reverse mortgage on a purchase transaction? So if I sell my home for $1 million and I'm purchasing another property for $700,000, then in that scenario, I have $300,000 in my pocket. But that property that you're purchasing for $700,000, if you could take a reverse mortgage against that for, let's say, $300,000, now you have an additional $400,000 in your pocket. So it's all about being liquid and having access to cash that you can use for other pieces in your life later on.
Well, what I love about that part of the conversation is, and I love the word right sizing, because you're right, you know, it is about getting them into the right solution. It always is when working with customers, to get them into the right product and the right solution. And I think in some cases, you know, when we use the word downsizing, we often assume, well, downsizing comes at a downsized price as well. So, you know, they're selling a property that's worth a lot more money and buying a property that's worth less. You know, many of the real estate agents on this call will know that's not always the case, right? Especially, you know, sometimes today when you're moving from one location into maybe another location where your children are or where you want to be, it could be at a much higher price. If you're looking for a building with amenities that meets the needs of, you know, you as you're aging and what your requirements are, it may certainly come at a higher price. And that's where reverse mortgage, I think, plays a critical role, where they don't have that same debt burden of taking on a traditional mortgage and having payments under their, you know, restricted income, but they can still get into the product or the property that they need, still have that same equity that they always had, and be able to get the reverse mortgage to cover the difference. So they're actually not losing anything.
Correct.
In this case, they're making a, let's call it a $700,000 move in equity from a house into $1 million condo, where they still have $700,000 worth of equity, and $300,000 of it is now covered on the reverse side with no payments.
Exactly. And, we are starting to see more individuals, for the purpose of funds, use a reverse mortgage solution for the purchase transaction.
That's amazing. And Clive, just to bring it back a little bit and kind of, when we're talking about the reinvestment, we covered off reinvesting into, future generations' home, into your children's home, or having them an opportunity to build wealth. But you also mentioned vacation homes and investment properties.
That's right.
Now, vacation homes, I think, is something, that's pretty straightforward for our audience to understand. I think a lot of retired people might want a, second home in Muskoka on the lake, or, somewhere on the lake, or somewhere else that they can enjoy. But what would be some of the benefits of an investment property for this demographic?
Yeah, so, and I do believe that people should always engage with the services of their accountant for the advice on the taxation side of this. But one thing that we do know within Canada is that whenever we borrow money for the purpose of investing, the money that we borrow becomes tax deductible. And so there's a couple of benefits that the actual borrower or investor receives by using a reverse mortgage solution to purchase an investment property. Advantage number one is that they can look, in some cases, to purchase a property either outright or with minimal mortgage amount. Advantage number two is that no payments are required on the money that was borrowed, so payments are optional. But the real advantage, Shubha, is that on number three, they've now purchased an asset that will appreciate in value over time and also generates them an income, right? So it's a really great opportunity to improve your overall net worth, increase your cash flow, and increase the size of your portfolio.
And let's just, if we're to look at that a little bit deeper. So I'm retired, I have a limited income today, but I have a lot of equity locked up in my home. But that equity is not generating me any revenue or any income that I can use to live my lifestyle. So I have one of two options. One is I could look at a reverse mortgage to access some of that as an income supplement and use some of my equity and start slowly spending that money and utilizing it towards my living and lifestyle. Or I could use a reverse mortgage. I could buy another asset outright, not have any payments attached to this, and be able to utilize the rental income from that asset to be able to supplement my lifestyle, all the while building wealth in that asset as well as it appreciates in price. I mean, I think that it's an incredible concept that is probably not often thought about for that age group and that age demographic, because that age group is more divesting than they are investing. But there's certainly certain ways that they can continue to invest, income supplement, and leave maybe a larger nest egg to their children or the next generation.
Absolutely. And we're seeing that many individuals are seeing the benefits of being more savvy with what they do and being more creative with what they do with the money that they receive from this type of product.
Amazing. Now, I want to talk about something, Clive, that I see and hear about quite a bit these days. We live in Canada, otherwise known as the Great White North. And, with the Great White North comes the weather of such, right? And a lot of the older demographic, or the demographic that no longer is tied to having to be here physically, are looking to warmer climates. And part of looking to warmer climates means purchasing a house or a condo or a property in another country or another location. And they often come back and say, hey, we don't have the money to be able to buy this. And how do we do this? Could reverse mortgages be an option or a solution for this type of client?
Yeah, definitely, it can. And, I've seen personal situations myself where people want to purchase a home back in the West Indies where they grew up. And so they'll have a spot here and they'll also go back there. We have some guidelines around the reverse mortgage being the customer's principal residence, so 6 months plus a day. But yeah, they can definitely use the purpose of the funds to purchase a snowbird type property at a different location.
Amazing, amazing. So far we've captured, for our agents on the call here, an ability for us to utilize reverse mortgages to help first time or second time home buyers get access to some down payment supplement to be able to help them either get into the home buying journey or to be able to be part of that move up process or the next step of their home buying process. We've captured a way for us to utilize reverse mortgages to increase the value of the property through renovations prior to selling and listing. So if we're working with this age demographic, rather than selling an older, unrenovated property, let's try to improve the value and get some maximization out of it. We've talked about the potential for reverse mortgages to help us purchase either a vacation home like a cottage or overseas in a warmer climate, but also possibly purchase an asset here that could generate income for them to help supplement their retirement and help supplement their lifestyle. I mean, I think that just on those alone, we're probably looking at reverse mortgages a lot different than we had come into this conversation. But what else are we missing?
There's probably one more R.
Okay.
I call it restructure. And so we are actually seeing great divorce in this specific era. And as a result, in these scenarios, Shubha, what's happening is if two people decide to part ways, then what happens with the property? Either both individuals will move out and purchase two separate properties, or one person will stay in this property and the other person will. So a reverse mortgage can help in both of these scenarios. It can help for the person who's buying out their partner in that scenario, but then it can also help in the example that we went through earlier, where you can use a reverse mortgage for a purchase. And the benefit there is that it allows you to have more cash in your pocket at the end of the transaction.
And that wouldn't even be one that I was thinking of. I wouldn't think that that's even a concern, but I guess you're seeing more and more of that in the market today.
That's right. That's right. So you've covered off the 4 R's that I would have in terms of how this product and solution can help the marketplace. And really, this is really about the Pineapple agents and brokers working with the realtors that are on this call and in person here in the studio to understand the benefits of how we can better serve your customers and provide opportunities.
That's amazing. So I think, I'd love to give some ideas on some ways that, our valued audience here can utilize this tool and this resource as a way to grow their business, but also build deeper, more meaningful connections with their client base, because that's really what's most important to us, right? If we build great connections, we know business will come. And if we do right by our clients and those around them, we know opportunity will come. So I think one of the ways, and I mentioned it earlier in the conversation, is making parents a part of the conversation. Letting them be a part of the home buying process with their children so they understand what options are available to them if they want to help. Because I feel a lot of parents want to help if given an opportunity, but they don't know that an opportunity exists that wouldn't put them into a financial constraint or a financially difficult position. They would assume that in order for me to help my children, if I don't have $100,000 sitting in my bank account that I'm not touching right now, then any other way that I would access that money is going to cost me my retirement. So I can't help my children. And one thing I've learned over the course of my life is if people are given a chance to help, they often will.
Yeah.
So I think involving parents in an early stage conversation, just so that they're a part of the process and they understand what options could be available to them. I think also reaching out to your database and having this conversation with them about some of the topics we've talked about here today. So whether that be improving their properties, to give them some time to enjoy. I think that could be one thing. If you've sold homes to people, 5 years ago, 10 years ago, 15 years ago, and they're approaching the stage of life, maybe they're just not fully there yet, where they're ready to right size or they're ready to make a change. Maybe in the last few years, you can talk to them about renovating the home a little bit in advance of that so they can enjoy it. Not just maximize the value, but let's renovate your home by using a reverse mortgage today so you can also benefit from a brand new kitchen or a beautifully landscaped backyard with a pool, whatever that might look like. So really doing some database reach out to talking to clients about setting up the next stage for them. And also something that I think is super important in today's environment is just given the economic landscape, how can this product help get you through the current, situation that we're in right now? So we're seeing stock market and investment portfolios very depressed. Most people have lost money in their portfolios, not, that it's not going to come back. This is not a financial call where we're saying, hey, sell all your assets and run for the hills. It's obviously going to rebound, but people's, RRSP portfolios, TFSA portfolios are substantially lower than they were, a few years back. So maybe they can utilize some of their home equity right now to navigate the current market as an income supplement while their investment portfolio grows back to where it was. They can also look at ways of purchasing additional assets like real estate, as an example, to supplement their cash flow. So really doing this database reach out from a point of concern and care of how can we help you navigate the current circumstances. And one thing, Clive, that we haven't talked about is that the gray population today actually carries a lot more debt than in any other time in history. So if they're carrying high interest debt or they're carrying debt of other sorts, how can we help them reduce that debt cost so that, we can maybe remove $500 or $600 worth of liabilities on a monthly basis and allow them that additional income to live their life to a certain degree? Anything you think we missed from that perspective of how our realtor partners can use this information to help grow and build their business?
Yeah, I just like to mention that we've had over 35 years of history in this space. And so as a result of that, we've got some great data, but we also have some very powerful marketing pieces that can be used to partner with you, with your realtors to reach out on. And so I'm very happy to have our team share that with your team as something that can be used to help generate conversations and to generate opportunities. The one thing that I would say that we haven't covered off is the whole concept about realtors themselves. And so what I think about realtors themselves is that many realtors do fit this demographic. These realtors or many realtors would own typically more than one property, and they're going to be retiring without any specific retirement pension plan. And so we are also seeing, and we've identified this trend and this opportunity to really even service not just our customers, but a realtor as a customer in this space. And that's the last nugget that I would want to leave for the realtors on this call. Speak with your Pineapple Mortgage agent or broker about how this can fit into your lifestyle and help fund your retirement.
That's amazing. And, we all know that our principal residence is of the only, tax exempt assets that we own here in Canada. So really utilizing and maximizing and harnessing its full potential is a powerful tool in, retirement and beyond, right? I'm going to answer a couple questions. So if anybody has any questions, feel free to throw them into the Q&A. But just as I jump to the questions right now, I just want to close out with a quick story here. And again, I'll use my parents as the example. I'm going to call them out a little bit here. But I remember sitting with my dad, and I'm the child of two immigrants. They came to Canada from India, worked very hard. They wouldn't consider themselves rich by any means. They're rich in they're wonderful children, but
That's a biased comment.
That's a very biased comment. I tell them that every day, Clive. But you know, I remember saying to my dad a few months ago, we were having dinner, and I said, "Dad, how does it feel to be a millionaire?" And my dad looked at me and he sat back in his chair. And, you know, parents and children of our generation and, you know, this type of background, we don't talk to our parents about money that way. And that was a bold statement that I made. And I said, "How's it feel to be a millionaire?" And he sat back, and my dad's an accountant, smart guy. And, "What are you talking about, son?" And I said, "You're a millionaire." He said, "No, I'm far from a millionaire. I don't have anywhere close. I don't know what you're thinking of right now." And he was stern and firm and adamant that he is not a millionaire. And I said, "But your house is worth over $1 million, no?" And he pondered it for a second.
Yeah.
"I don't know how much my house is worth." I'm like, "Well, Dad, let me tell you how much your house is worth, because I'm in the business, right?" And all of a sudden, he was a millionaire at that dinner.
Right.
And I close with that story to really reiterate the fact that you mentioned of how much people don't know they have and what they would do if they knew. Would that change how they live their lives? Would it change how they help their children? Would it change what they bought or what other assets they purchased? So this conversation to me, Clive, is yes about understanding the product, but it's more about how can we help people know what they don't know?
Right.
And what could they do with that knowledge?
Yes.
So thank you so much for sharing this.
you.
And I know we have a few questions, so I'm going to jump to some of the questions online here. So one of the questions that we have here is, what are the current rates and have they increased much with the current rate hikes that we've experienced?
Yeah, so I would say that if you were to ballpark rates, we're typically about 200 basis points above a typical line of credit secured rate at a major financial institution. And so we do, because we do have different products, Shubha, we have a range of rates dependent upon the product. So the individual asking this question specifically, I'm going to say to reach out to us directly, and we'll do an assessment on your specific situation. And from that situation, we'll determine what is the best product and the best rate for that scenario.
Perfect. Thank you so much for that, Clive. And we have another question here is, can you give a brief description of the 4 different options you have?
Yeah, I would love to. So we have our flagship product called the CHIP reverse mortgage, which is what most individuals would be familiar with. We then have a product called the Income Advantage. And the Income Advantage product is a product that takes the money that borrower qualifies for, but pays it to them in an income stream. And the borrower gets to select what that income stream is.
Tax-free, by the way.
Tax-free. We then have a third product that I had mentioned, CHIP Max. So our CHIP Max product is where we'll lend a little bit more money than we normally would at a slightly higher rate. And then finally, we have our product called CHIP Open. And as I mentioned earlier in today's session, that's for temporary type financing where someone needs a borrowing solution that's probably just for about 4 to 6 months.
Amazing. Amazing. Well, thank you so much for answering that question, Clive. And that pretty much brings us to about the end of our session here and the end of time together. You know, just to kind of recoup and regroup on some of the items we talked about here. At Pineapple, you know, the goal is that we are always supporting and helping the growth of our partners, specifically our real estate agents. So one thing I would love to extend the opportunity for is taking up Clive on his extension of marketing materials and resources that could be beneficial to your business. So please, for everybody on this call, reach out to the Pineapple agent that invited you and see how you can create a co-branded marketing campaign or a database reach out or a call blitz campaign that you could utilize to be able to reach out to your current database, see what their needs are, how you can support them, and how you can help. We are always happy, willing, and able to be able to support your growth. The second thing I would like to say is please reach out to us if you need any assessments. So it is a complex product and one that we would be happy to offer some solutions and guidance on. So if you find that you have clients that may fit this category, but you're not really sure, or you have a younger demographic that wants to talk to their parents about this type of product, but not sure how to approach it, please reach out and your Pineapple agent will be happy to support you in that conversation and in providing that solution. Clive, as we close out here, is there anything, final remarks or final statements that you want to mention that you might think we missed?
I just want to say thank you to you, Shubha, and the team. We have a great partnership with Pineapple, and we're happy to be able to have these sessions with you. We hope that you'll have us back.
Absolutely.
We've also given away some books for in here at the studio for the first 25 people, a book called Home Run, the Reverse Mortgage Advantage, written by our president and CEO, Steve Ranson, and co-authored with our executive vice president, Yvonne Ziormecki Fisher. And we're willing to offer this book to anyone who's interested in simply having an easy read to learn more about reverse mortgages and how they fit into this big world.
That's incredible. Well, thank you. If you'd like a copy of that book, please don't hesitate to reach out to the agent that invited you here, and we'll make sure that we can get that copy over to you. Thank you so much for graciously offering. You know, and last thing that I just want to say about reverse mortgages, I think that we all have a little bit more light shed into what was possibly a darker tunnel in terms of understanding what a reverse mortgage is and how it helps. But I feel very strongly that reverse mortgages will be a big part of the conversation of real estate over the next 10 years. There's a massive transfer of wealth happening right now from the aging population into the next generation. There is a need to meet the housing requirements of this aging population, whether it be, you know, utilizing some of this equity to figure out what their next path is, or they're utilizing this equity to be able to stay in the home a little bit longer as they navigate and figure out what that is. And as I mentioned, there's more people over the age of 65 than there is under the age of 5. So we as a community here, as professionals, have to focus on meeting the needs of these Canadians that they really need our help, they need our guidance, and they need our support. And you are the best people to be able to help them with that. With that being said, I thank you so much for joining us here today on our Realtor webinar series. We hope that you'll be joining us next month. We'll have another great speaker and another great session for you. And in the interim, if there's ever anything that we can do to help support you, your business, and your success, please don't hesitate to reach out. We're always here to help. Thank you so much, ladies and gentlemen, and look forward to seeing you all soon.
Thank you. Bye for now.